Okay, so it's the first time I've ever done something like this with a screen recorder. Don't know what the quality is going to be like. I hope it isn't too bad. So, viewpoints down the decks, it certainly was a testing day. This is a H3 chart. So, basically, what we had here is this H3 push up. This is, the lower leg of the structure. This is the upper leg of the structure. So, H3 is bullish right away until this low gets broken, which today it actually did by this horrific bearish candle. So that instantly transitioned us into bearish momentum. It also did the same on the H1 chart. So from a H1 stand, we were already bearish. We turned bearish, with making these highs and lows. But I don't start trading until 1 o'clock, which is the New York session. Obviously, the clocks have changed, so that was incorrect today. But, with a day like today, that was quite irrelevant. So, initially I was looking for sells, but I don't like selling unless it's in a discounted area. And so on a H1 top to bottom at the time, discount is this area up here. Okay, so I can't sell really unless it hits this discounted area. Now I could see quite quickly into the session that this isn't actually a feasible area, but because although H1's bearish, H3's bearish, and I am, generally looking for sells, I have to appreciate as well that, I've got to be aware of transitions bullish to then pick up the momentum to get the sells down. So let's get rid of that. Now, from a 15-minute standpoint, if we just delete some price here, 15-minute standpoint, this is what I'm seeing. Okay, London's put in this low at 9:30. And we've also got London's high, which is up here somewhere. Okay, so it's fair to presume that London's high isn't going to be grabbed today, but London's low could well be grabbed or respected. We don't quite know. Now, what's below us? When I zoom out and look, I see we've got a H1 inefficiency and a H1 order block below. But it does seem that after this big wick, we start making bullish order blocks and starting to try and recapture some of that bullish move. Now, obviously, with things like this, I do have to be very aware that it might not be a bullish transition. It may just be a take profit event. Okay, because obviously when these orders are coming in, they do have to close out at some point and rub their hands together and take the money. So that, did occur here and then pushed the market up. We then came back down. So we're now at 12.45, which is just before I start trading. And I can see that so far we respect London's low. I'm just going to do another candle. Okay, so you know my play. I like to see stuff get taken before I get in. So we're now at 1:30. We can see that London's low has been taken and its wick rejected it, okay? So that's the first thing I'm thinking, okay, so I might be interested in a buy now. I've seen that we've got this London liquidity. You've got these people trying to buy this market up. Slowly but surely it's come down, wicked through it. It has actually rejected London's low, but it's also grabbed all the liquidity below. Okay, so now let's keep watching what happens on a 15-minute chart. Big push up. Okay, this big push up breaks through 1, 2, 3, 4 wicks. It breaks through 2 short-term highs. Okay, because that's one short-term high, that's a second short-term high. We break through both of those. Okay, now what I'm seeing at this position here is I'm thinking, right, I know everything is pointing to a bullish setup, but I don't think a bearish setup, sorry, but I don't think a bearish setup is going to happen today. But what we have just formed is a left, a head, a right shoulder, and we've got this big bullish hammer or pin bar, whatever you like to call it. Okay, so now my ears are pricking up because I want to start getting into a buy if I can. So we're going to watch price action. I'm going to speed this bit up a little bit. Okay, this is where stuff gets a little bit interesting. So what we can see here is we've had this big push up, yeah? We've then come down. We've ran this liquidity here. We ran these wicks here. Okay, bear that in mind. We've ran these wicks. Right, again, we had this push up. We had this wick here. Now, this wick here is important, and I'll tell you for why. When you see a push from bottom to top like that, and then you get this pullback, it's at this pullback here that your general traditional retail will tend to start getting buys, putting buys in from, because you've got a bullish engulfing followed by another bullish engulfing. It looks like a pullback. Okay, we've got great targets above as far as I'm concerned at this point. So picture your retail. You may have thought, right, big push up, I missed it, wait for a pullback. You're waiting. You get a bullish engulfing followed by bullish engulfing. Some retail may decide to start, buying there with a stop below. They may buy there with a stop below. Now, if they bought there with a stop below, they could have, ridden it up a little bit. But, like I said before, I like to see the obvious move get taken out. And the obvious play here was to buy in on the pullback. So when I see this wick occur here, this is what interests me. I've just seen the first pullback point get wicked out. Okay, we've not closed a full candle below it. It's at this point, when it's this sort of price action, it's very jumpy and pushy. I like to use the 30-second time frame, which is what I used here. Okay, so candle by candle, we'll see what happens. Okay, so the first thing you can see is we've had a wick rejection, and then we've had two bullish candles that follow. Yeah? After those two bullish candles, what I'm starting to wait for is I'm waiting for a decent point to get in, because I've seen this pattern before. We've taken out the first pullback, okay, but we've taken it out of a wick. Once that job's been done, we've made a bullish candle followed by another bullish candle. We've broken through this wick and we've broken through this wick, just about. It's at this point that I put my Fibonacci on. Now, my entry criteria is that I have to see a rejection from this 50% zone. So there's my 50% zone. Let's watch. We come down, we wick and re-reject. It's at this point here. In fact, there you go. There, okay, we wick and re-reject. It's at this point here that I see that happen, and I'm waiting for the break of the high of this candle, which is where I entered. Once that happened, I got filled pretty quickly. Now, where was I targeting? Of course, my initial take profit was up here. But the way today's been, I'm not sure what it's been like on other instruments. Today has been very up and down, okay? So I wasn't going to start trying to be a hero today. But I either had two choices. I either run this to an R4 and close out, or I see how quickly it passes through the R4. Now, this passed through fairly quickly. Now, when this passed through R4, I had a retest of my entry, okay? Little paper hand shakeout. You know me, I either win or I lose. I don't do much sliding to break evens and stuff like that. Now, when we hit R4, we powered through it, okay? Now, when we power through R4 like that, my take profit was up here just in case of an explosive move. As soon as I powered through like that, I dragged my stop loss to R4 and I secured my R4 because that is always my target. We did, in fact, last 30 seconds and I got done at an R4. Now, it didn't quite break these highs, but as you can see, it did come up again. But look at that move. It's disgusting. Okay, we had a push up back to entry, a push up, slightly above entry, another push up, and then watch what happens. It fizzles all the way down and turns bearish again and starts forming another reversal. But that is a very sloppy day's trading, but I did manage to pull my money out of the market today on it wasn't even an intraday basis, it was an intra-session. I could just see we have this push up, we have this pullback. Pullback gets wicked out. You have to fix up when you see stuff like this and realize what could potentially be happening. And I was correct. I managed to get my 4R. I made my money for the day. I could have held it and got 6.69, but look at these market conditions. But that's a trading day done.